Welcome back to the channel. I know I've been missing for a couple weeks. I do make a habit to post a video every week, but this time there's an exception. I'm getting married this week, so my attention is needed somewhere else. In this video, I want to talk about where the market is headed and is it wise to invest in real estate today? So here's the big question. How many homes do you think Canada needs to build by 2030 to stabilize the home prices? Going once, going twice? The answer is 5.8 million homes. This is a recent article shared on CBC News about the housing market in Ontario. Let's talk about how long it will take to achieve this target. My team and I practice real estate here in the Greater Toronto area. If you'd like to talk about buying a property, selling a property, or investing in real estate, please click on the link below and book a call with me directly. CMHC, which stands for Canadian Mortgage Housing Corporation, exists to make homes more affordable for everyone. They did an analysis to see what it would take to make home prices stabilize across the country. There are two major factors that they use to measure housing affordability. The first is housing expenses, which is your mortgage, maintenance, insurance, etc. Number two is average disposable income, which is the income that people make after paying their taxes. Now, if we take the total housing expenses and divide it by the average disposable income, we'll know how much people are willing to spend on homes. This is called the affordability ratio. Let's look at Canada's affordability ratio from 1990 to 2000. As you can see in this graph, we were paying up to 50% of our income in 1990 towards buying homes. It started going up after the recession in 2000. And now it's back up at 50% since then. Let's look at the three most busy provinces in Canada and see what their affordability ratios are compared to Ontario. BC primarily depends on Vancouver for its housing economy. It's significantly higher than Ontario, which depends on Toronto for its housing prices. Notice the trend in Ontario was very similar to the Canadian graph up until 2017. Which is when the prices shot up, and now they've almost caught up with BC. Alberta is roughly 10% less than the Canadian line, which means people only spend up to 30 to 40% of their income on homes here. You might see people invest in Calgary knowing that the home prices are a lot more affordable there than Ontario. Let's see if that's a wise decision. Let's dive deeper into the 2021 numbers. In BC, the average prices were $929,000 and people would spend up to 60% of their income on homes. In Ontario, the average prices were $871,000 and the affordability ratio was 59%. In Alberta, the average prices were $426,000 and the affordability ratio was half of that, which is 31%. Here's the big question. How much does the housing affordability ratio need to be to make homes more affordable for everyone? According to CMHC, that ratio is 40%, which leads to the following average prices. As we all know, the current conditions of the home prices in Ontario is due to a very high demand and low supply. So how many more homes do we need to build in order to achieve our target of average home prices in Ontario? CMHC did a calculation to estimate how many homes need to be built by 2030 to reach this target based on population growth, higher interest rates, and projected incomes. In British Columbia, we need to build 0.62 million homes to achieve this average home price target, which is 24% more than where we are currently. In Ontario, we need to build 1.6 million homes to achieve this target. It's questionable if we can gather the manpower and workforce to reach this target within 8 years. In Calgary, the affordability ratio was 31%. So if we just continue building at the rate we currently are, we can sustain the prices and keep them where they are currently. In basic economics, if the supply and demand are pretty much the same, the home prices and cost of goods won't likely increase. So if you're looking for a large ROI on a property in Calgary, that's likely not gonna happen. So the biggest cities of concern to achieve our affordability ratio target of 40% are Vancouver and Ontario. People have the choice of going to other cities where the prices are a lot more affordable, but they're drawn to these cities in particular for a reason. The vibrant lifestyle, the constant development in infrastructure, and the diversity in the population attracts people from all over the world. If you think about it, every big city in the world faces the same challenges of high home prices. Can you think of any city in the world that has affordable home prices? None. The simple truth is, if a lot of people want to live in the same city, the prices will go up. We can argue this report and the home prices all day long, but if there's one takeaway you can get from this report, it is that the demand will remain high and home prices will continue to rise beyond 2030. The interest rates have gone up and may continue going up in the future. Will the prices drop? They may adjust 5 to 10%, but if the interest rates go up as well, you may end up paying more to the bank than your own principal, even if the prices drop. Do you think the prices should drop further, or is this enough? Comment below. If you like this type of content where we talk about future market conditions and dissect the current market trends, please like and subscribe below. It cheers me up and helps me stay active. Remember, we provide results that move you.